There are a million ways to make $1 million, and in this video, we're going to delve into one of them. Ray Dalio, the founder of Bridgewater Associates, the largest hedge fund in the world, is a name synonymous with success in the world of finance. With a staggering net worth of over $19 billion, Ray Dalio stands as a role model for those aspiring to navigate the complex world of finance and wealth creation. His journey to immense prosperity is not a stroke of luck but rather the result of a set of principles he has rigorously adhered to throughout his life. In this video, we have collected the most important lessons from his remarkable journey. After watching this video, you'll have gained valuable insights that will help you chart your path to financial success. So, let's grab a drink, settle in, and embark on this insightful journey. Welcome to Rich Mindset, How to Get Rich according to Ray Dalio. In this video, we will explore the life and wisdom of Ray Dalio, breaking down his principles that have guided him to immense wealth and success. By the end of this video, you'll have a better understanding of his principles and how to apply them to your own journey to financial prosperity. Understand the economic machine. The first principle that Ray Dalio emphasizes is understanding the economic machine. To succeed in the world of finance, one must first comprehend how the economy works in its simplest form. This might seem like a daunting task, but it's entirely achievable and profoundly important. The economy influences nearly every aspect of our lives, from job opportunities to the prices of everyday goods. Understanding the economic machine involves delving into the basics of supply and demand and how they impact prices. This foundational knowledge can serve as a solid starting point. Additionally, familiarize yourself with macroeconomics, which includes concepts like GDP, unemployment rates, inflation, and monetary policy. These economic indicators will provide you with insights into economic trends and cycles, enabling you to make informed decisions about your finances. By acquiring this understanding, you ensure that you are not blindly investing your money in the stock market, real estate, or business ventures. You'll be equipped to interpret economic data and make educated choices regarding your financial future. Use the 5-step process to get what you want out of life. Ray Dalio has outlined a 5-step process that he believes can help most people achieve their goals in life. These steps are: set clear goals. 1. Identify problems and don't tolerate them. 2. Diagnose problems to find their root causes. 3. Design solutions to overcome problems. 4. Do the tasks required to execute the solutions. 5. This process isn't limited to financial goals, it's a blueprint for achieving success in any area of life. Setting clear and specific goals is the crucial first step. Vague aspirations won't get you far, you need precise objectives. For instance, stating that you want to be rich is ambiguous, but setting a goal to save $1 million by the age of 50 is clear and actionable. The subsequent steps involve identifying problems that may hinder your progress, diagnosing their root causes, and designing solutions to overcome these obstacles. For instance, if your goal is to save $1 million but you're struggling to make ends meet, there's a problem. The root cause may be a low-paying job or a lack of budgeting skills. To overcome this, you might need to acquire new skills or cut unnecessary expenses. Finally, executing your plan is vital. Planning without action is futile. By following this 5-step process, you'll have a structured approach to achieving your goals, making your journey to success more manageable and effective. Don't confuse what you wish were true with what is really true. Ray Dalio cautions against the common human tendency to confuse what we wish were true with what is actually true. Wishful thinking can be perilous when making financial decisions. For instance, believing that buying a lottery ticket every week will make you a millionaire or that investing all your savings in a trendy cryptocurrency will lead to quick riches can lead to financial disasters. Instead, base your decisions on facts, data, and reality. When considering an investment, conduct thorough research, analyze market conditions, and assess risks. When planning a business venture, consider not just the potential profits but also the costs, competition, and market demand. By focusing on what is really true and backing your decisions with evidence and data, you'll make more informed and rational financial choices, ultimately safeguarding your financial well-being. Understand the power of compound interest. One of the most potent tools for wealth creation is understanding the power of compound interest. It allows your money to work for you while you sleep, gradually building your wealth over time. The key to leveraging compound interest is starting early. The longer you let compound interest work its magic, the more substantial the returns. This means that even if you're starting with modest savings, it's essential to initiate your investment journey as soon as possible. Consistency is equally vital. Regular contributions to your investments, even small ones, can lead to substantial wealth accumulation over the years. In essence, compound interest emphasizes the value of long-term thinking when it comes to building wealth. It's not about getting rich quickly, it's about accumulating wealth steadily and securely. Diversify your investments. Investing in the financial markets can resemble a roller coaster ride, with unpredictable highs and lows. To mitigate risks and potentially enhance returns, diversification is a strategy worth adopting. Diversification involves spreading your investments across various asset classes, such as stocks, bonds, real estate, and more. By doing so, you reduce the impact of one investment performing poorly, as the gains from other investments can compensate for losses. However, it's essential to understand that diversification doesn't mean haphazardly distributing your money. It requires a thoughtful approach that aligns with your financial goals, risk tolerance, and investment timeline. Thorough research and understanding of the investments you are making are crucial. Learn how to convert your earnings into wealth. Earning a substantial income is one part of the equation, but knowing how to convert your earnings into lasting wealth is another. Many people make the mistake of mismanaging their income, spending excessively, and failing to save or invest for the future. To break this cycle, Ray Dalio suggests a fundamental shift in mindset: pay yourself first. This means allocating a portion of your income towards saving and investment before spending on other expenses. By adopting this approach, you prioritize your financial future over immediate gratification. Converting earnings into wealth is not a sprint, it's a marathon. It requires discipline, consistency, and a focus on long-term financial goals. While it may be tempting to spend lavishly when you receive a paycheck, delaying instant gratification for the sake of financial security and future wealth is a key principle for success. Stress test your ideas. Ray Dalio emphasizes the importance of stress testing your ideas, whether they relate to investments, business ventures, or any other aspect of your financial journey. Stress testing involves critically assessing your ideas and plans to identify potential weaknesses and vulnerabilities. Rather than simply pursuing your ideas with unwavering enthusiasm, consider the potential pitfalls and challenges that may arise. Seek input and feedback from others, especially those who may offer different perspectives. While it can be disheartening to hear about the flaws in your plans, this process is essential for improvement and refinement. For example, if you have an investment idea, consider the various scenarios in which it could fail. By identifying these weak points, you can proactively address them and develop a more robust strategy. Remember that stress testing is not about perfection, it's about enhancing the quality and resilience of your ideas. Know when to cut losses. Admitting failure or realizing that a particular investment or venture is not working as expected can be challenging. However, Ray Dalio emphasizes the importance of knowing when to cut losses. Continuing to invest time, effort, and resources into a failing endeavor can be more detrimental than beneficial. Whether it's an investment that has taken a downturn or a business venture that is not gaining traction, there comes a point when it's wiser to exit and cut your losses. This decision requires a level of detachment from emotional attachment to your ideas. Consider the financial and emotional costs of persisting in a failing endeavor. Are you continuing because it makes sense, or are you driven by stubbornness? Recognizing when something isn't working and making the decision to move on frees up your resources, both in terms of time and money, to pursue more promising opportunities. Don't let fear of mistakes stop you from taking risks. Taking risks is an inherent part of any journey to success. However, fear of making mistakes can paralyze individuals and prevent them from seizing opportunities. Ray Dalio advises against letting this fear hinder your willingness to take calculated risks. While the fear of making mistakes is entirely normal, it's essential to recognize that mistakes are valuable learning experiences. They provide insights, teach resilience, and contribute to personal and professional growth. Avoiding risks altogether can limit your potential for growth and success. To overcome this fear, consider reframing your perspective on mistakes. Instead of viewing them as failures, see them as opportunities for improvement. Embrace the possibility of making mistakes as a natural part of the journey to success, and you'll be more willing to take the necessary risks to achieve your financial goals. Embrace reality and deal with it. Embracing reality and dealing with it is a principle that emphasizes honesty and transparency with oneself. It involves acknowledging both strengths and weaknesses, successes and failures. In the context of financial matters, this principle urges individuals to confront their financial situation realistically. Facing financial realities means taking an honest look at your financial status. Do you have debts? Are you saving enough for your goals? Are your investments performing as expected? It's about being brutally honest with yourself and your financial standing. Once you have a clear understanding of your situation, the next step is to take action. This might involve budgeting, increasing savings, or reevaluating your investment strategies. It's not about striving for perfection, it's about acknowledging where you are and taking steps to improve your financial well-being. Adapt to the cyclical nature of economies. Economies are inherently cyclical, with periods of growth and recession. To thrive financially, it's crucial to adapt to the cyclical nature of economies rather than attempting to fight against these natural fluctuations. Imagine economic cycles as waves. You can either ride these waves or be overwhelmed by them. When the economy is booming, it presents opportunities for investment or business expansion. Conversely, during economic downturns, it may be wiser to tighten your financial belt and focus on saving for the future. Adapting to economic cycles involves staying informed about economic trends, remaining flexible in your financial strategies, and being prepared for changes. By embracing and working with these cycles, you can position yourself for financial success in any economic environment. Maintain a long-term perspective. In a world driven by instant gratification, it's easy to lose sight of the long-term perspective. However, maintaining a long-term outlook is a fundamental principle for building lasting wealth. Think of wealth accumulation as a marathon, not a sprint. While quick financial gains are enticing, sustainable wealth takes time to develop. It's about making decisions today that your future self will thank you for. This principle underscores the importance of investing wisely, saving consistently, and planning for long-term financial goals. Recognize that the actions you take today may not yield immediate results but will contribute to your financial security and prosperity in the years to come. Rome wasn't built in a day, and neither is wealth. By maintaining a long-term perspective, you can navigate financial challenges and work steadily toward your objectives. Be flexible and adaptable. Flexibility and adaptability are paramount in the ever-changing landscape of finance. Financial markets are dynamic, and economic conditions can shift rapidly. To succeed, you must remain flexible in your investment strategies and adapt to changing circumstances. Market conditions, investment opportunities, and personal financial situations evolve. It's essential to monitor your investments actively and be willing to adjust your strategies when necessary. Flexibility also extends to your ongoing financial education. Stay up to date with new financial tools, investment vehicles, and strategies. Even as you age, don't use that as an excuse to become rigid in your financial approach. Ray Dalio himself continues to adapt and learn, regardless of his extensive experience. Embracing flexibility and adaptability can help you navigate financial complexities and seize emerging opportunities. Understand the principles of successful negotiation. Negotiation is an integral part of various financial endeavors, from business deals to salary negotiations. To succeed in negotiation, it's essential to understand the principles of successful negotiation. Negotiation is a delicate dance between asserting your worth and recognizing the value others bring to the table. Mastery of negotiation begins with thorough preparation. Understand the stakes, know your limits, and put yourself in the shoes of the other party. Negotiation is not a zero-sum game, both parties should benefit. Patience and perspective are your allies in negotiation. Avoid rushing and allow negotiations to unfold at a reasonable pace. Over time, you'll develop a keen sense for identifying mutually beneficial outcomes and spotting opportunities in deals. Ensure that those who work with you understand your expectations. Building and leading a team is often crucial to financial success. However, it's equally important to ensure that those who work with you understand your expectations clearly. Miscommunication or unmet expectations can lead to inefficiencies and setbacks. Maintain transparency in your communication with your team. Regularly check in with them to ensure that everyone is aligned with your objectives. This includes not only assessing task completion but also gauging whether team members understand the overarching goals and expectations. Remember that your team plays a significant role in your journey to success. Effective communication and mutual understanding of expectations can enhance productivity and streamline efforts toward achieving your financial goals. In conclusion, Ray Dalio's principles for financial success provide valuable insights into navigating the complexities of wealth creation and financial management. Whether you're an aspiring investor, entrepreneur, or simply seeking to improve your financial well-being, these principles offer a solid foundation. From understanding the economic machine to embracing the cyclical nature of economies, each principle guides you toward making informed, strategic decisions. By adopting these principles and integrating them into your financial journey, you can chart a path to financial success, building wealth that lasts a lifetime. Ray Dalio's journey to becoming one of the most successful figures in finance serves as a testament to the effectiveness of these principles. As you apply them to your own life and financial endeavors, you'll be better equipped to make sound decisions, manage risk, and ultimately achieve your goals. In the world of finance, there are countless strategies and approaches to building wealth. Ray Dalio's principles offer a timeless and comprehensive framework that has stood the test of time. While there may be a million ways to make $1 million, Ray Dalio's wisdom provides a roadmap that can help you navigate the journey to financial prosperity. So, as you embark on your own path to financial success, remember the words of Ray Dalio and the principles that have guided him. Understanding, adaptation, flexibility, and a long-term perspective are your allies. Embrace reality, face your financial challenges head-on, and don't let the fear of mistakes deter you. With determination, discipline, and the right mindset, you can set yourself on a course toward financial abundance. As you continue your financial journey, consider exploring Ray Dalio's writings, such as Principles for Dealing with a Changing World Order, and Principles. These resources can further deepen your understanding and knowledge, equipping you with the tools to navigate the ever-changing landscape of finance and wealth creation. In the world of finance, Ray Dalio's name shines brightly as a beacon of success. By incorporating his principles into your financial strategy, you too can illuminate your path to wealth and prosperity. Remember, wealth is not about quick gains but enduring success. Stay committed to your goals, adapt to change, and maintain a long-term perspective, and you'll be well on your way to financial greatness. Thank you for joining us on this journey through the principles of financial success according to Ray Dalio. We hope you found these insights valuable and actionable. Stay tuned for more in-depth explorations of wealth-building strategies and success stories in our future videos.